Thanks, everyone. Great to be back in Manchester. I grew up here, so I can certainly say there's been a lot of changes over the years, of even the past 10 to 15 years. I'll just be speaking on some of the economic and political of trends that are coming through within the UK market and what to expect over the next 12 months. Just in terms of my background from where I am, I was a city analyst for 20 years. I covered the media and tech sectors. I was twice analyst of the year during that time. 4 years ago, I set up my own advisory business, Liberty Sky Advisors. And then also as well, what do is marry the wider economic, macroeconomic trends with what's going on in the media and tech sectors. But for this sort of presentation, what we'll really focus on is what's happening in the wider macro standpoint. A few quick things. If you're going to listen to me, you should have you should at least know how the predictions went. For last year, these were my macro predictions. Don't worry, I do get things wrong on things. And these are the ones around media and tech as well on there. Television, hopefully, will have a good year this year, and it certainly has started off quite well. One thing that looking at the UK macro environment is to remember that we are an island, but we don't operate in isolation. That what happens in the wider world particularly affects us. Now, that is certainly the case when it comes to the US, but also as well other markets. If you look at what's happening at the moment, this is from the IMF, and don't worry with these slides, by the way, I'll go through them quickly, but you will get a copy of them as well, so you can see the data behind them. The latest IMF forecasts, they've actually upgraded the forecasts for the US in terms of GDP, but if you look at actually what's happening in terms of the Eurozone and the European economies, they've actually brought back their forecasts, and you can see the UK there is actually more towards the bottom of the 2024 growth forecast. So we're still growing, but not particularly great. As I say, what happens in the US will impact the rest of the world. So inflation, for example, what you're getting there is, if you look in the US, the expectation is, at the start of the year, was that inflation would come down quite rapidly. That hasn't proven to be the case on there. Actually, inflation has probably remained quite stubborn. And that has implications in terms of interest rates, where particularly there does tend to be a ripple effect throughout the world. What the Federal Reserve does with interest rates has a direct influence on what the other central banks do. We had Andrew Bailey this morning talk about that it looks as though we'll get a rate cut in the summer. But if the US, for example, was to raise interest rates, that would create pressure on the pound. But there is a wider and a more long-term issue here, is that for 40 years, the world's economies have benefited from a gradual reduction of interest rates that's come through. And that has benefited things such as particularly assets, house prices, stock markets, private equity, etc. We're now coming to the end of that cycle. Yet it is likely that interest rates will remain at an elevated level, certainly compared with historic levels, as we go into the medium term. What about the UK? Well, said before, I mean, it looks as though in terms of growth, we're actually will do okay. In terms of things, this is a chart. It's by the Office of Budget Responsibility. What it looks at is the projected growth rate moving forwards, both in terms of GDP and GDP per head. And you can see there's been a slight reduction in forecast, but it looks as though from where we're going, we will get back to where we were in COVID, probably within the next 18 months or 2 years. So it'll be slow, but we are getting there. And generally, it should be a relatively benign economic situation when you look at things overall. This is from NatWest in terms of what they're assuming, because banks have to make a macroeconomic forecast when they're looking at their own projections moving forwards. Again, they seem to be relatively confident in what will happen with GDP and unemployment. And this feeds on to this point. Again, wages are holding up well and inflation is falling. However, do bear in mind that the UK economy does have a number of structural faults in it. This is the growth rates comparing with a number of our major European competitors. Over time, it goes back to the post-World War II period, 1950, up to where we are now. You can see there, despite the 80s, in terms of where we were actually outperforming most of the economies, you can see there now that actually our growth rate is pretty stagnant. Yes, I mean, it's fairly much in line with likes of Germany and France and so forth. But again, it's not great. Eastern Europe, obviously, expanding much faster. Our savings rate is too low, and that's important because you need savings in order to invest. And if you can see where we are now in terms of things, we are very much the bottom scale in terms of the major economies. And Brexit is still having an impact This is looking at goods exports, sort of in terms of our pre-Brexit peaks and what happened there. Yeah, you can see that essentially from where we were sort of in 2010 and the comparison there, yeah, that the gap is widening between essentially sort of goods in terms of physical goods, yeah, stagnating, services though continue to expand. And again, this is making the same point that we are as an economy becoming more and more dependent on services over time. So, yeah, from a macro, sort of from a wider picture standpoint, it's an okay standpoint. But of course, when you look at people's lives, sort of people don't tend to look at what's happening in the wider economy. I mean, they do, but what they're really concerned about is what's happening with their own lives. First of all, the good news, actually, unemployment remains low. That's critical. Yeah, if people have a job, sort of, and they're getting a wage, then generally they're going to feel better about life. You can see here, in terms of the unemployment rate, this is taking it back over 50 years. In terms of where we are now, we're at quite close historical levels. Now, yeah, there are some question marks over this, for example, people on disability benefits and so forth. But certainly when you look at the UK at the moment and you look at the news that's coming through, you're more likely to hear sort of noises about the fact that you can't get workers, rather than essentially saying there are too many workers about. That could be due to a variety of factors, Brexit, so demand for people in the hospitality sector, etc. And certainly when you look at wage growth and what's happening, the positive thing here is that it's actually turned positive in real terms, i.e. that wage growth is above inflation. And again, if people have got more sort of money in their pockets and they're feeling sort of as though they've got enough to live on, then generally they'll be quite positive in terms of how they view things. But what you are starting to see now is that wage growth is starting to slow down within the economy. And you can see there in terms of when inflation was high, there was push through of wage increases coming through. So to some degree, this is actually a reflection of the fact that inflation is coming down. But there's a wider question here whether the rebalancing between labour and capital, sort of how much that has to play through. And the fact is that when we look at what's going to happen moving forwards, there's no doubt that there is going to be a lot of pain that potentially could come for the consumer. Now, if you see here, just because inflation is slowing down, it doesn't mean prices are coming down. All that's happening is essentially prices are continuing to go up. They're just going up at a lower level than they were 12 to 18 months ago. For many corporates, this is good. Bear in mind, sort of, maybe we'll get some disagreement on this, but for many sort of the big multinationals, they've been able to reset their prices at a new permanently elevated level in terms of things. But for the consumer, of course, it's taking more money out of their pocket. And again, we're likely to see a reversal of these increases that we saw during the pandemic. And of course, you've got the question mark of interest rates and what happens there. The UK tends to be a market where most people tend to have 2, 3, 5-year mortgages. US, for example, a lot of people have 30-year mortgages. So the increases in interest rates don't necessarily feed through as quickly, although there are some impacts on areas such as auto loans and so forth. But we are going to see, in terms of many consumers moving forwards over the next 12, 18 months, as their deals come to an end and they see much higher interest rates coming through, there's a big question mark as to what they do in terms of spending. And this comes on to this point about housing costs. It's not just the people who have mortgages, it's also as well the people who rent, because the people who rent, they're often sort of renting for people who do have mortgages on there. So that sort of acceleration of costs will come through. Here we have on the left-hand side, sort of inflation for the various components. You can see on the general inflation levels, it's coming down, but if you look at housing costs, it's continuing to accelerate. Now, bear in mind, sort of with the UK, that we do have a sort of weird situation here. If you actually look at what is the single biggest category of resident, it's actually people who own their homes outright without a mortgage. Just about, I mean, this is from 2021, so you're probably looking that this figure has gone up slightly. I put it now around 33, 34% of households don't have a mortgage, own their homes. Will be in the older demographics, and wealthier demographics as well. For those people, it doesn't really matter sort of what happens with interest rates. If anything, actually, it's a positive, because they like to have savings, and the interest rate they get on savings will go up. So you do actually have a large cohort that, in terms of interest rates going up, isn't really affected. But of course, you've got sort of in terms of the two categories of those who actually do own the mortgages and those in private rental who will get directly impacted. And for those people, you're probably looking around 60%, 55% of overall households. So it is the majority. But it's not just in housing costs, it's not just in food where you're seeing this ripple of inflationary effects come through. This is for price increases for mobile phone contracts, looking for 2023. You'll know that in terms, or I assume most people know, in terms of mobile phone contracts, contracts generally, broadband, a lot of them tend to be linked in with the inflation rate. So obviously when inflation was very high in 2023, you were seeing mid-double-digit increases coming through in terms of those rates. Lower increases in 2024, but it's again still quite substantial. So the price increases are really across the board. Now, one thing sort of where that feeds into, I said before that people tend to look at their own situation. I also said as well that on the average, sort of things look, they look generally okay in terms of the UK economy. But again, for a large segment of the population, actually things are not okay. Actually, they've been declining. They're likely to get worse over the next couple of years, and that brings a number of implications in itself. So if we take a look in terms of disparities of wealth, if you look at the international standards of inequality, the UK tends to rank just behind the US in terms of inequality levels. This is from the ONS. It's looking at where wealth is concentrated amongst the population. It's not just your house price, it's things like your pension, which actually is a surprisingly large contribution on that. It's your financial assets and so forth. I think if you were to do this sort of off the top of my head, the bottom 50% of the population owns something like 7 to 8% of the nation's assets. Yeah, there is something like that. I mean, it is such a huge concentration that you've got within these figures. And as I said before, housing is a particular area. This is just looking at what's happened with over the past 30 years in terms of the costs, real housing costs of households. Buying with a mortgage, interest rates have come down. The cost has come down, but will go up. Owned outright is fine, but if you live private rent or social rent, it's actually gone up quite significantly. But bear in mind that actually many of these inflationary pressures were coming through before the pandemic. On the left-hand side is looking at sort of households by their quintile, and what it shows is that these are for years for 2006 to 2019. Now what you could see at the top, quintile 1, that's the poorest 20% of households. Actually, in terms of the amount that they had to spend on essentials, that was already going up during the pandemic, before the pandemic, went from 52% of the household income to close to 60% on there. Actually, for the richest, sort of at the bottom, hardly changed. And so this was turbocharged by what happened with the pandemic. It was the lowest sort of income sections of society that saw the highest rates of inflation increase. That's the chart on the right-hand side showing what happened at the height of the inflation level. For the poorest 10% of the population, the inflation they saw was 14%. Yeah, for the top 10%, it was 8% in terms of that, because poor households spend more on essentials. And again, this is not just an economic thing. This is looking at digital skills. Increasingly, if you think about it, we are an economy where, banks are closing on the high street. You therefore have to go online. You have to go online for many services, and that will only increase given the use of AI and so forth. But many people, again, particularly at the lowest levels of society, don't have the basic digital skills that they need to succeed. Question is, what do they do in a world that's increasingly digital and is moving away from a physical environment? That's a question mark. And again, this whole thing about communications poverty rate, 19 million, as you can see there, sort of lacks some of the basic essentials of what I would assume everyone in this room takes for granted. So what does this mean in terms of the political front and so forth? And probably should mention here one of my sidelines I do, as well as been an analyst and an advisor. I'm a sort of, best way I can describe it is a semi-professional better on political events. So it is something in terms of the political environment that pay quite a lot of attention to, just because I tend to spend quite a lot of money on it. So where to see things in sort of where things stand. So one thing I think on the general wider point, and this is maybe something that we are living through at the moment, but I think we've sort of passed the tipping edge, is that for the past 40 years, we've been living under what I would call the Reagan-Thatcher consensus. The whole idea that governments should be smaller, that businesses know best, that essentially, generally things are weighted more towards capital and businesses rather than labour. We're now seeing that reverse out across the Western world, to various degrees in terms of things. You see it in the US, in terms of Biden being the first US president to be on a picket line. You can see it in some of the initiatives, particularly coming through in Europe. But this is a trend that's only going to continue. And if you look at what's going on, and we're moving more, the person on the right-hand side is John Maynard Keynes, we're moving more back to what sort of would almost call features of the post-World War II economy. Yet more about social democracy, more thinking about sort of wider population, yet more thinking about sort of methods to reduce inequality, which, as shown before, probably needed. Off the back of that, we've also as well got the return of the Cold War with what's gone on in terms of Ukraine and the war there, but also as well what's happening in areas such as the South China Sea. Rising tensions there, not just only with Taiwan, but also as well what's happening in areas such as the Philippines and control of the sea routes there. Again, this is only going to be something which there does not look as though there's going to be any change over the medium term. So this is very much of a world that we're really going to get used to. And if you look at it, essentially for many businesses, geopolitical trends are the #1 concern in 2024. But if you bring it back to the UK, what you can see there is that people who live in the UK are very pessimistic about the state, but it's not equal across all levels. You can see this is coming from a survey that was done sort of last year. People who've law nationals, for example, agree that Britain, nothing works anymore. And again, aren't particularly sort of optimistic about the future of Britain. People generally feel quite disgruntled with the state of the country and how things are at the moment. And that brings danger, because danger actually, when you get people who feel as though actually their situation in life, they haven't really got that much more, they can't really improve their status, they see their house prices going up out of reach, they see the cost of living increasing all the time, but also as well they do feel disrespected. What that tends to bring is essentially that does tend to lead to protests and often can be quite violent. And you can see here in terms of what people think, those in power, how they treat working class people. Again, there's a lot of dissatisfaction here in terms of the whole of status. This is not a good environment for the country to be in. And what that breeds, of course, is populism. We saw that only a couple of miles up the road in Rochdale in terms of what happened with George Galloway. But actually what should consider as well, that it was probably, as concerning for the established parties, is that if you look who came second to George Galloway, it was an independent who had no political background whatsoever. The established parties were actually beaten quite handsomely. But again, this is the movement that you're getting across Europe, both on the left and both on the right. Yet dissatisfaction with the established parties. And bear in France, which is where this picture is from, the traditional parties of the left and the right, less so the right, have been crushed by the rise of the populists. There's no reason why this can't happen in the UK. Now, if you look at the UK general election, you think things will look absolutely fine. In terms of Labour has a large lead. How is it you look at the local elections? It should be clear that essentially, things are only going in one direction. Famous last words, going to disagree, and you can call me back in 12 months' time and say I got it absolutely wrong. I'm not too sure about this. These are Keir Starmer's personal poll ratings. If you look at it, I haven't really moved over the past 2 years, but you can see more people think negatively rather than positively. And I think that essentially, if I look at Starmer from a just when I see him in terms of interviews and when he answers questions, my personal opinion from an analyst standpoint is he's absolutely awful at doing that, and he gets really, really trapped very, very quickly. And I think if I was the Tories, what I would do, I would have a long general election campaign. I'd put Starmer under the spotlight, because many people then will be looking at him as potential Prime Minister and not casting their votes in terms of someone who essentially, so that they can beat the Tories with. So I don't think actually the outcome of the election is by any way guaranteed. And if that's the case, then what we could do from a standpoint, political standpoint, we may be heading for a period of uncertainty. So conclusions. Overall, what we'll see is that we'll probably see the economy do generally okay. As I said, not particularly great in terms of what's happening in comparison to the rest of the world. Again, on average, when you look at the average person in the UK, again, they should do okay. Unemployment's low, wage growth low, etc. Where we're really got to focus on, though, is what's happening with the poorest members of society, because that's really where the pressure is. And from an advertising standpoint, yes, most consumer spends happens in the wealthiest deciles, but particularly as we move to an environment, particularly from CPG companies, for example, where they're looking more for volume rather than pricing growth to actually drive top-line growth, you can't ignore 50% of the population and what's happening with them. And I think we've got some time for Q&A. Oh, thank you.
going to open up the floor to you. Does anybody have any questions for Ian? The gentleman over there? Yeah.
So, Matt Bourne, Director of Comms at the AA. Ian, that was fantastic. Thank you very much for that.
Thank you.
I might have missed it with all of the slides, but one thing you didn't talk about was AI, or where you think that might kind of kick into gear. And I know AI is going to be covered later, but how much of a disruptor do you think that potentially poses in what you're sort of forecasting?
Yeah, no, that's a very good question, so I didn't put it in those slides just because I think we'll get sort of a lot more developments that will come through sort of over time. So direction of travel still remains sort of unclear. B, there's a question mark over what exactly is AI. You could argue that AI has been going on for quite a few years. How would see AI in terms of things? I'd say could have significant. I'm going to say yes and no in terms of actually sort of whether it will be disruptive. Let's start off with a no. I'm a skeptic on AI, and what I mean by that is I think many of the claims that have been made about AI, sort of in reality, I think they won't actually come through. There's a very interesting analogy here with what's gone on with the military. The military has been a big advocate of technology, the so-called revolution in military affairs. If you look at sort of the US military for the past 40, 50 years, it's never worked. In fact, if you look at what the US is doing now, the US military in terms of AI, which again, it's been far ahead of the curve in terms of what's happening in the civilian world, it's now actually pulling back its efforts. Because what it's saying is it doesn't actually work. Yeah, it doesn't work to the degree that it needs to work. It's a bit like autonomous cars. You need them to work sort of perfectly or as close to perfectly as you can get. In many cases, AI just doesn't do that at the moment. And I'm actually quite skeptical that it will actually get to that point, because AI at the end of the day is something which is, when you look at it, it gives you a scale of average. Average can be average good, average bad, but it's around that point. It will never give you perfect, and it will never be able to replace exactly what a person does. Having said that, I think what you will get is that you will get sort of many companies who will say, and you can see this with the likes of BT, who will use AI to push through cost savings. And again, we'll get this whole idea that you're going to have to get used to more chatbots, and the companies will claim that AIs do that, so they can get rid of people who are doing those functions. There'll be a variety of other things that they will do. If I was looking, for example, in terms of the area that I think is most going to come under pressure, and I don't think this is necessarily sort of a major disclosure, I think it's going to be those in the graduate classes who are in creative industries, so agencies probably sort of will come under pressure. And I think if you look at the agency model and focus on that in particular, that's got some really interesting questions, because the agency model at the moment is based on a cost-plus model. It's based on FTEs. In a world of AI, that's meaningless. It has to move more to an output-based model. So I think if you look at your own world, I think it's going to have some very interesting implications for the remuneration model moving through. I think in terms of the economy, the wider economy, I think where it's going to do is potentially, in a worst-case scenario, it does to, if you want to call them the sort of white-collar graduate sort of professional classes at a certain level, what sort of automated car factories did to the car worker in the 80s.
The gentleman here, from the second row from the front. Got time for just one more question.
Okay.
Assad, banner of the Unmistakable. I was struck by your line about price increases and how corporates have done really well on them, and they continue to do well. But if we move towards social democracy, I'm curious about where you'll see a price rebalancing. Will competition come in to drive the prices back down, or do you think they're now going to be sustained at that higher level for quite a long time?
I think sustained at a high level quite a long time. I think so. You've got short term, and then you've got long term. So let's take the short term. Most firms at the moment are banking on a return to volume growth in 2024, particularly the CPG companies. My feeling is inflation is going to remain a lot more stubborn than what people think. Really, because you look at what's happening with supply chains, been disrupted with the war in the Middle East. You look, more and more nations are essentially trying to do a land grab for resources and so forth. I think we're going to have that elevated level. So I think there's going to be an interesting dynamic here for firms, whether they absorb those price increases or try to pass them on to the consumer. But I don't see sort of prices coming down. I think for the political environment, I think there'll be a lot of talk about greedflation. I think in the short term, at least, governments won't really know how to sort of position that. So it's not going to happen. Medium term, longer term, it could do. And I think you could see some element of that's coming in places like France, for example. I think longer term, if look at prices and where they are. The reason why I said it's good for corporates is, yeah, this inflationary period, what it allowed firms to do is push through maybe up to a decade of price increases, yet in some cases within 18 months. As I say, those price increases remain at elevated levels. Now, many of those firms' costs have also gone up as well, labour costs, etc. But some of them, at least, should come down on a cyclical basis, yeah, in terms of that. And that should lead to an expansion in margins coming through over the medium to longer term. Now, there are some signs of that has come through in some of the results that are coming through so far. We'll have to see whether it actually sort of relies on that. New players coming in, again, don't think so, because one of the problems that you've got, well, two issues you've got here. One is that if you look at the overall environment, sort of a greater share is being taken by large corporates, particularly over the past 18 months, 2 years, and linked in with that, capital is no longer cheap. So to fund new companies, you need the available investment. Interest rates have gone up. Yeah, that investment is no longer there. And bear in mind, that investment is also competing as well with areas that 3-4 years ago nobody cared about, such as defence, infrastructure, and so forth. So you've got a more limited pot of money, but also as well, you've got more claims on that pot of money as well. So I don't think it's gonna, I don't think it'll change. If anything, I think the power of the sort of major corporations in that regard will probably increase.
Okay, ladies and gentlemen, if you could join me to kindly give Ian a round of applause. Thank you.